Are you thinking about buying or selling your home? There's some things that might mess you up right here. Hello everybody, my name is Barry Horvath and this is Moving Forward TV with your local market update.
And I am Dylan Gaston. Thank you so much for joining us today. So much has been going on in the world of real estate and mortgages, and I heard a realtor say yesterday, well, through a client, I heard a client say that a realtor friend of hers had said something like, you know, the lenders aren't getting them done on time.
What?
I know. So I said to my friend, I said, okay, would you like the lender translation of that? It basically means, yes, everyone is full right now. There is a lot going on right now in the mortgage world. Obviously, all of you very busy realtors out there, you already know it. There's like everybody came out from under every single rock there is out there to buy a house just in the last couple of months.
You know what? Statistically, true story. You know me, I love numbers.
I know.
People buy on the rise. That's just normal.
Is it like a panic? I think it's almost like a panic.
People will always buy on the rise. So people are buying right now. We're on a rise. We're in a rising market. We have limited inventory. And part of that limited inventory is due to COVID. Believe it or not, the people do not want other people coming through their home when they're trying to sell it.
Yeah.
There's that fear that they don't want people trouncing in their house that might,
And the alternative, a lot of people are like, okay, well, then we'll buy new. Well, even the builders are backed up. So that's taking a very long time too. So people are like, well, I don't want to wait, 10 to 12 months for my house. I want to move now. So, which is, contributing to the shortage.
Things are taking longer. Appraisals are taking longer, as you all know, because they're busy. We're at a weird time because rates are low, prices are high. I mean, let's face it, you can buy a lot of house right now for less money because of the low interest rate environment we are in.
Very good point. So maybe a year ago you couldn't afford that, $300,000 house, but today you can because the interest rates are lower.
And it seems like on our government loans, we're able to get debt ratios that are higher approved right now.
I know. That is crazy.
Go figure, right?
I know.
I mean,
we're getting debt ratios over 50% in some cases. That's crazy.
Yeah, but it works. Hey, so let's talk about the big hang-ups that we have.
Right, so with all of this, COVID
yes,
brings some challenges. And no, I'm not just talking about the extra challenges to get the loans done with the extra pay stubs and things like that has to do. But here's what we're running across lately, whether it's on a refinance or we've even had some people who are currently right now selling a house and planning to buy another house, upgrading, which is nice. We all like that, right? However, forbearance. Forbearance.
Yeah, so for those of you who watched our show a few months ago, maybe you didn't listen, but did I say that in a nice way?
You did.
The forbearance, and you realtors need to hear this, your forbearance now will affect potentially your buyer's ability to list their property, because a lot of people think, oh, I'm listing my property, so I don't need to worry about paying my mortgage because of the CARES Act, because I'm selling it anyway. Who cares? They can't hit my credit, right?
And my lender offered me a forbearance.
So who cares, right? I mean, what difference does it make? Just don't make the payment. Well, we got some repercussions for that now, and new rules are coming out every day, because you have to remember, this is all new. This is kind of like 2008 all over again.
Right.
I hate to say it, not in a market panic decline
but
sense.
In the rules changing every day.
Yeah, so for those of you who are not paying your mortgage and taking their lender up, that are pushing forbearances, actually.
I know, which they shouldn't be. That kind of bothers me as well. The servicers are pushing the forbearance. Oh, you don't have to, and they make it sound like the greatest thing in the world.
So
It's not.
we have some specific guidelines we want to review with you, and it's really going to impact you realtors because you think that, well, we're just going to pay off the forbearance that they're behind. But believe it or not, it will affect if you're listing that property and they're going to buy another house and you're going to take them out shopping, well, there's certain rules and guidelines they're going to have to follow to move on and buy another house if their current home is in forbearance. And you need to understand these because they're very important, because you might be listing and selling their house and they may not even be able to buy another house, even though their credit's fine, even though they make plenty of income, even though they're walk on water and they're and they have beautiful credit. Beautiful credit, so that's all they need, right? No, wrong.
Wrong. So,
Sorry.
We do that with yeah. Anyway, never mind. Inside thing.
Life begins after coffee. Okay.
It does.
Second cup.
All right, so all of the agencies have changed things. So Fannie Mae, Freddie Mac, which is your conventional loans, FHA, VA, and USDA, every one of them have put into place temporary guidelines. Keep in mind, these are just temporary guidelines. This is not changing the rules forever. This is changing the rules for...
Forever.
We don't know. It could be for the next couple of months. It could be for the next couple of years.
Forever.
So we're not sure, but they strive to say that these are not hard guideline changes. These are just mortgagee letters, is what they call them, that they put out to us saying, here's the new guideline for right now until you hear from us again. So, and with the forbearance thing, they keep on changing them on us. Talk.
All right, you listen to your voice. Drink coffee. So the rules are changing. So I think what Delynn is saying, if you don't like the rules, wait a minit, okay?
Just like the weather in New England, right?
Yeah, if you don't like it. Oh, only in New England?
Yeah, well, I don't know.
What about Seattle?
We always said that in New England, but yeah.
Seattle.
All kinds of stuff changed there really fast. Anyway.
You got your voice back?
I do. Okay, so with the FHA, VA, and conventional, those are kind of like the ones that we want to touch on. Those are the most ones that we get. So, like I said, they're changing every single day, and it depends on where people are in the forbearance. So as far as the people buying and selling go, VA and FHA, very strict on this. If someone is in forbearance, even if they're selling their house right now and they say, like Barry said, oh, hey, you know what, while it's on the market, we don't have to worry about making a mortgage payment. We can save all of this money to put towards a purchase on our new home that we're going into contract on. Not if they're going FHA and VA, because FHA and VA require, after you complete a forbearance, 12 months payment history. You have to have a 12-month clean payment history before you can get another FHA or VA loan.
So in layman's terms, if you list that seller's home and you want to take them out shopping, you may have to wait 12 months. But if they're paying it off, in my mind, how can they have 12 consecutive payments? I'm not trying to put holes in the rule.
Which is crazy. So here's exactly what the mortgagee letter says. So the borrower is granted a mortgage payment forbearance, may be eligible for a new FHA or VA mortgage, provided they continue to make regular scheduled monthly payments and the forbearance is terminated, or completed the forbearance and made at least 12 consecutive monthly payments after the forbearance or cash out refi. And I think what they're referring to here is the people who maybe they were in a forbearance and, let's say they do a forbearance until November, and then they decide in February they want to sell. Well, after their forbearance ended, they didn't make 12 payments yet.
So they're not going to be able to buy again.
So they're not going to be, those people are just going to have to go conventional. Let's see, the other one is forbearance has been on refinances. This is what we're running into. They've completed the forbearance and made at least 3 monthly mortgage payments after the forbearance. Or they've completed the forbearance. If they've made less than 3 payments, we can do that as a FHA streamline refinance. So there's different guidelines for every single one of them. Conventional's guidelines, a little bit different. One moment, please.
Much more lenient than...
Let me get that one up. Here we go. So for the conventional guidelines, oh gosh, this is tiny. You either need to blow it up or...
Stinks, doesn't it? Remember we used to be able to read this stuff?
I know.
Just move it back further. I can read it then.
I know. Okay.
Let me get in there with you.
Borrowers in forbearance but selling the home. This is considered a successful completion of the forbearance program, and the borrowers are immediately eligible for new financing. This is excellent news. That's exactly what it says. This is excellent news because that changed. It used to be that they had to wait as well. So the borrower, if they have, they consider if they've sold the home that they've completed that forbearance period, and they can, on a conventional loan, go out and buy right away again, which is very nice. Here's a couple of others that say borrower who is currently in forbearance but has continued to make their payments, because a lot of, like we said, a lot of the lenders are offering these forbearance to the people. So when we run the credit, it shows up that these people, their payment is deferred because they're in forbearance right now. And the people are like, really? I'm in forbearance? We had that happen on somebody, remember?
We've had
really?
a couple
I'm
of
in
them.
forbearance? I didn't even know that.
And it puts extra layers on us as far as what we have to do to make sure that they're
Yes.
be able to. People don't know all the behind-the-scenes stuff in the mortgage world.
And the bottom line is, no matter what property, so even if somebody has like 3 homes, if any home that they own is in forbearance, they are not eligible for a new mortgage until that forbearance is closed.
Yeah, here's the
Any of
bottom. In a nutshell, there's no such thing as a free lunch, folks. I mean, that, you think you're getting a break, at some point that forbearance is going to have to be paid back. They're not going to let it, there's no forgiveness on these. There's no, I don't need to pay it. And it could, my opinion is people potentially are going to get hurt with this because they're not going to be able to catch it up. It's kind of scary to think about the number of people that are doing them, still doing them, and may not be able to get out of it. And then what?
I know.
You think they're going to stop the foreclosures on them after? We don't know. You don't know. It's not worth the risk in my mind. If you can pay your mortgage, pay the mortgage.
I know. Please, because this is, like we said, changing daily, and it's just not a good idea. Just do everything you can. I know that we said this a couple months ago when this all kind of first started in the summer, that lenders were offering forbearances. You know what? Do the forbearance on like your car loan. Your student loans are offering it, things like that. Take whatever you can from the electric company, the water company, if they're giving you any kind of payment.
She's busy right now.
Relief, sorry. But not your mortgage. Keep on paying your mortgage, because even though they say that it's not going to hurt as far as your credit goes, that they're not going to report it as delinquent, Barry. But keep in mind, this is what happens, and this is something that we talked about yesterday, remember? So even though that they're not reporting your mortgage...
It's not me. Not me. Go ahead, check your tweet.
Sorry. Forgot to silence it. Even though they're not reporting you as delinquent on your credit report, they say, oh, it's not going to affect your credit. It's not going to affect your credit. Keep in mind, everything affects your credit. Everything. They're just saying it's not going to affect your credit. They're not reporting it as a delinquency. But do not be disillusioned. It absolutely still affects your credit, because when you're making your monthly payments, you are being reported good credit history. So you are getting increases in your credit score, right? Because you're showing a good, when you're not making your payment, the good's not being reported either.
You know what? And we're really going to talk a lot about that in our upcoming Lunch and Learn, because we're going to have a credit expert on. And you know what? It was kind of like, remember when people disputed credit? And because it takes it out of the algorithm for reporting.
Right.
So when someone has disputed credit, we have to get them out of it. So,
right.
So it's the same concept when they're doing the forbearance. So bottom line, don't do a forbearance unless you absolutely have to. So I don't know if there's any more you want to cover on it, because
Well, the only other thing that I wanted to touch on was, like you started to talk about, so if you did do a forbearance and you now are saying like, oh, crumb, I need to catch this up. I need to
crumb.
like get a,
you think that's what they say?
They do. They say, oh, crumb.
That's my grandmother. She was the sweetest lady ever.
But anyway, so now you need to catch this up. Keep it, because you want to do a refinance. You want to take advantage of maybe these great interest rates, or buy something different, or whatever it is. So the thing is that now you have to catch it up. They are going to need to source those funds. How did you catch it up? Or like Barry said, because here's the other thing that people don't realize: if you did a forbearance for 3 months, those 3 months payments, there's no free lunch, as he said. They don't go to the end of the 30-year loan that you're in. They go to the end of the forbearance period. So if you took a forbearance for June, July, and August,
Boom.
September 1st, you owe not only September's payment, but those 3 payments that you skipped as well. So you owe 4 payments come September 1st. A lot of people are struggling with that right now. They didn't know that was going to happen. It wasn't explained to them properly, unfortunately. And now they're coming to us and saying, well, can I refinance? Can I include that in?
And the time that they needed help most, we're not potentially be able to help them.
And the answer, unfortunately, is no. You cannot roll that into your refinance. Hard and fast rules, guidelines. Borrower who is in forbearance or any repayment plan at that time, because some people are going into modifications, which that's what we would recommend for you. If you are at that point, go into a modification.
If you can.
If they will offer that to you, because the loan is not eligible for refinance or rolling any of the forbearance funds into the refinance. So you have to come up with that money on your own, and we have to know where you came up with it from. We being if you're refinancing and trying to get a lower interest rate. Otherwise, just do it, catch it up, get yourself back on track, and then hopefully the interest rates will still be low and we can refinance
And
you.
if you're not sure, give us a call. We can go over the current rules and guidelines, and like we said, if you don't like them, wait a minute, because tomorrow might be different. So, it's all new, it's all different. So just don't be afraid to reach out to us, and we will give you the answer of the day. Don't you like that?
Or of the minute.
Of the minute, yeah. Hey, but rates are great. It's a great time to consider refinancing. If you want to lower your payment, that's probably a better option than going into a forbearance. So, all right, I know we usually talk a little more about mortgages, but with COVID going on, we wanted to talk about, when you're in trouble like this, there may be other alternatives, and we wanted to share with our local community what we have going on, that maybe potentially we can actually help you if you are hurting from COVID. So one of the things we're doing is we're working with the county right now, and we're working with the CARES program. So if you're not familiar with the CARES program, we're going to share with you a few minutes about it and how you may qualify, which could potentially help you with your mortgage payment or your rent payment, any utility bills you may have, not your cell phone bill, sorry, meaning your water or electric. Not your cable bill. That's not a necessity. Sorry, I know it's football season, but come on, we had to throw it in. It's also
Of course you did.
But we do have potential options for you to do that. So we're going to talk about that just for a couple minutes before we close out the show, if you're all good with that.
And this is a great segue. Like we said, don't go into forbearance. There are other options out there, and one of them does happen to fall underneath the CARES program. This is not only for the people who are renting. I know a lot of people think it's just for people who are renting, but it is not. It is also for people who own their home as well. There are some income restrictions on this program. There are some guidelines that have to be met on this program. Mind you, the income restrictions, you know what, here's the thing. It doesn't hurt to give us a call and see if you fit into the program or not. Everything is confidential. We're not going to go talking to anybody or telling anyone that, you had called us and asked about it. But you just might, you never know. Some people think, well, I own my house, so I don't qualify. Yes, it's even for mortgage help. So give us a call, and we can kind of go over some of the guidelines and things like that with you, just so that people know. And those of you who are real estate partners out there, first of all, this is also for you as well if you need it. But any of your clients, maybe you have some people who are saying, I'm going to have to sell my house because I can't afford the mortgage payments or things like that. There are definite options and things. So tell people before they get into too much trouble, reach out. We would love to help them.
So the program we're working with is, the first qualification is, and I'm sure these are all around the country right now because the government has offered grants for people suffering from COVID. This is for COVID hardship, so if you're in a COVID hardship and you don't, we're not going to make you prove that your hardship's from COVID, this is for people who really truly need the help. And again, like I said, you do need to meet income requirements, and you must be a Pasco County resident in the program that we are offering right now. So if you know anybody or you that could use a little extra help right now, we know the holidays are coming up, and it's going to be a struggle for a lot of people this year because our restaurants are still not back at capacity. Look at the gyms have dwindled. A lot of them are hurting the travel industry, the hotel industry. Those are all industries that are really, really upside down right now. Yeah.
And those are a lot of really good people out there. Your servers at your favorite restaurant, or your bartender at your favorite place that you hang out or something. Those are the people that, time to reach out to. Maybe your hairdresser. They're all back at 50% capacity as well. So you never know what's going on in someone's life. And we just wanted to let you know that there's definitely help that is out there. And we, being our networking group, West Pasco Business Association, is the one who Barry was talking about. We've partnered with the CARES program and are able to offer people some help in that area. I don't expect people to come flooding to our doors because a lot of people, pride and embarrassment, they don't want to tell people. So that's why we're looking for your help. Just in conversation, if you come across some people, some clients, some friends, some neighbors, whatever it might be, just let them know that there's help available and reach out to us.
And you know what? Some people thought if they come to us for this that we're going to just write them a check. It doesn't work that way. Remember, this is government money. It's strictly regulated. It is grant money. We're happy to help get it in your hands, but it doesn't go directly to you. So we're going to pay your landlord directly. We're going to pay your mortgage company directly. We're going to pay your water, your utility companies directly. This is just not a free handout like, hey, I'm having a COVID hardship because I'm a server at XYZ restaurant, so give me some money. No, right. It doesn't work that way at all. But it is an awesome program. In my opinion, way better than forbearance. I mean, why? I know.
I know.
And you don't have to catch us up. Literally,
and you don't have to pay this back.
No.
This is money that is just going to be. They're going to make your mortgage payment for you. So it's not money that has to be made back.
So we're going to put more information out there about this. If you want to check our website, go to West Pasco Business Association site, wpba.biz. You can get information there. We do have a special email address if you want to inquire about it. It is info@wpba.biz. Again, info@wpba.biz. We will be happy to answer questions for you. And if you know anybody, we're really happy to try to get them from falling behind on any financial crisis they may be going through. Rather than going through forbearance, we would love for you to reach out to us about this. And
again, everything is very confidential. No one is going to say anything, and you can read up on it yourself right there on the website. There's some FAQs on there. So by all means, please do so.
And funds are limited.
And funds are limited,
Very
yes.
limited, and limited per family,
And you know,
too.
sadly, the other thing that I wanted to bring up real quick is you know, maybe I think we've kind of gone in a wave with the COVID thing. You know, there was so much of it for, you know, back in
That's what
March
Maria
and
does.
April. It
Does
was.
she do that in your
Yes,
group,
she
too?
does.
Yeah, I don't know what that is. I don't know where
I
it came
don't know
from.
either. The wave.
It's kind of funny.
Anyway, so there was a you know, kind of a flurry of things in March and April, right? And then throughout the summer, and then things kind of like hit a lull. Well, we just heard some numbers from the local government here, Pasco County. Sadly, the COVID cases are on the rise again. For whatever reason, they're not sure. They say it does not have anything to do with the children going back to school, and does not have anything to do with the bars opening up. So they're not exactly sure. They're saying it's kind of like onesie-twosies all over the place, or maybe they just don't want to scare people. I'm not sure. But the bottom line is it would not surprise me if they're going to be doing some more adjusting, and maybe adjusting downward on capacity or things like that, which means keep your eyes and ears open, because there might still be, you know, everyone thinks, oh, well, whoever lost their job, they already lost it. Maybe not.
Yeah. Yeah,
Maybe
there could be
not.
another wave
Another
here.
wave. That's what I'm thinking.
Yeah, and it's kind of, you know, we got an election
It's a
year.
little scary.
Election year, some volatility in the markets. Mortgage rates, as you know, are like here today, gone tomorrow, here this morning, gone this afternoon, here at 10 o'clock, gone at 11.
Changing every day.
Yeah, so if you
2 and
see
3 times a
something you
day.
like, get your lender to lock it in. That would be, you know,
Yeah.
if you get the pricing you're looking for, because it's
Your
a
lender
little...
can't do that for you. You have to make that decision.
Yes, yes. So let's talk about our upcoming Lunch and Learn, too. Don't forget, reach out to us about that CARES money. We're happy to help you. Do you remember the date on our next Lunch and Learn?
October 13th.
Thank you. October 13th. We have...
October already?
I
Can
know, I
you believe
can't
it? Where did
believe it.
2020 go?
It will be via Zoom. We will have Michael with Alpha Credit Recovery. He does a great job. You're going to like it. We've had people, we just had him recently bring someone from a 590 to a 660
In a short period of
in
time.
a very short period of
Yeah.
time. So don't give up on those people that say my credit is not great.
And don't think it's, okay, I'll get to these people 6 months from now.
No, because you just don't know. I mean, we can turn around. He's going to educate on what affects your score, how you can improve it, and
And
you
a
know,
little more about how the forbearance is affecting people.
and with people under 700 right now, conventional loan pricing is not pretty. I'm just telling you, for whatever reason, if you're under 700.
The investors, mortgage-backed securities.
But FHA
don't
rates
look at those.
and your government VA rates under 700, they don't seem to care. They're like, nah, we'll give you a better rate. I know. Because we think you need the help.
And that's funny, you know, that's why we say, you know what, you don't like it, just wait a minute, because things change so much. Because just a few months ago, FHA was horrible.
Yeah, I know.
The rates were horrible. FHA didn't want to touch anybody. They got such a scare with the whole COVID thing. They backed off of everything, but now they're back.
I know.
They're back.
Well, hey,
Don't
share-
be afraid of FHA.
And share this show. Share our information.
Thanks, everyone. We are Today and Every Day.
Moving forward. Have a great week.
See you next week.